Bay Area homebuyers would face a financial hit if the Republican tax reform proposal becomes law. Republican lawmakers want to cap the mortgage interest deduction at $500,000. Under existing law, people can claim a deduction on home loans of up to $1 million. KPX5's Kiet Do did some math today. And Kit, what'd you find out?
Yeah, the consensus amongst the realtors here in the South Bay is that this is a raw deal for homeowners in California. But just how much money are we talking about here that's going to come out of your wallet? We'll take a look.
Well, I was shocked.
It's certainly pretty bad.
We asked real estate and tax professionals to run the numbers from the GOP tax proposal, and for home buyers in California, it was ugly. The big change is capping mortgage interest deductions at $500,000 of the loan amount and capping property tax deductions at $10,000.
In the first column here, we see the median price of $1 million.
Jeff Bell is the past president of the Silicon Valley Realtors Association. Bell crunched the numbers for a typical $1 million house in the South Bay. Under the new GOP tax plan, you'd have to pay an extra $400 a month. That's about $5,000 a year, all out of pocket.
17% of people living in Santa Clara County can actually afford to buy a home. And so will $5,000 a year make or break a difference? It certainly can when we're looking at numbers as low as 17% affordability.
House Republicans also want to eliminate deductions for medical expenses, moving expenses, and the personal exemption of $4,050 per family member.
Property tax, and that's capped at $10,000.
San Jose State professor Caroline Chen spent 13 years at the IRS as an attorney and crunched the numbers for a family of 4 with a gross income of $300,000. The GOP plan is on the left and the current tax code is on the right.
You would deduct $16,200.
Using the most current tax laws, which has various step increases,
your tax due is a flat amount.
This typical upper middle class Silicon Valley family is paying $57,000 in federal taxes. Compare that to the GOP plan with no personal exemptions and a flat tax rate of 35%, and the tax bill jumps up to nearly $93,000. What's more, the GOP plan also eliminates another big deduction, state income tax payments.
It could potentially be quite painful because we have one of the highest income tax rates in the entire country.
Gustavo Gonzalez is the incoming president of the Santa Clara County Association of Realtors and says the new tax plan is political payback for a blue state like California.
Look at the numbers. I mean, we are being punished because our housing is very expensive. I mean, that's not fair to any Californian that's having to buy an average price home of $1.1 million. It doesn't make any sense.
And so if this plan passes, it would only affect new home sales moving forward. Existing mortgages will be grandfathered in and untouched, but the realtors think that this will have a chilling effect on home sales because why would you want to sell your house and then try to get back into the market and put yourself in a worse financial situation? And so the association's plan now is to mobilize their members to put some pressure on Republican Congress members so that they do something to help California. And we're live in San Jose. Kiet Do, KPIX5.